January's job numbers are out this morning, and the economy seems to be continuing to be on an upward trend. Canada added 150,000 jobs last month, exceeding expectations. Most of the gains were in full-time work. Meantime, the unemployment rate held steady at 5%, which is just shy of the record low 4.9% seen last June and July. Joining me now with more is BNN Bloomberg's Paul Bagnell. Paul, give us some analysis on this report coming out this morning.
Well, it's a remarkable jobs report, Marcia. Fully 10 times the amount of jobs that economists had predicted were created in the Canadian economy during the month of January. 150,000 jobs in January created. Economists who were polled by Bloomberg News, that survey resulted in what is referred to as a consensus expectation of 15,000 jobs. So it was remarkable. The unemployment rate held steady at 5.0%. That's the same level it was at in December. And it was a very, very broad-based gain in jobs. We saw most of the jobs, about 125,000, created in the goods, in the services sector, but there was also very strong growth, about 25,000 jobs in the goods producing sector as well. So it's a remarkable piece of economic data. And this is important, Marcia, because the Bank of Canada has recently told Canadians it's willing to stop or pause its interest rate hikes depending on what the data shows about the Canadian economy and whether or not inflation is moving sustainably downward or not. And there's certainly nothing in these numbers that would take pressure off inflation. This type of employment growth would suggest the Canadian economy is still very hot and that inflationary pressures remain.
So I think, Paul, a lot of people might be confused because we so often talk about the possibility of a recession, of a downward trend in the economy, yet we have such strength in the job market. So how do you square that circle?
Well, there's a couple things. It's becoming very clear now that the strength in the employment market in Canada and in the United States is becoming a real mystery to economists who are, of course, expert in economics and in labor markets. They don't understand why these economies can continue to churn out the jobs numbers that they do. Remember that in the United States, the most recent employment report showed 500,000 jobs created in the U.S. economy during the month of January, also miles ahead of what economists had forecast. The other thing is to connect this to the possibility of inflation. The narrative runs like this, that these ultra-strong jobs reports will fuel inflation. And if that the banks will feel that the central banks will feel that they have no choice but to continue raising interest rates to bring inflation down. If the interest rate hikes are substantial enough, and they've already been very substantial, there's a possibility of slowing the Canadian economy down to the point where it actually reaches a period of negative economic growth, actually moving into recession. And so that's where the fear of recession comes from. Keep in mind also that the Bank of Canada began raising rates in March of 2022. And we often hear from economists that it can take a full year or a little longer for interest rate hikes to begin to bite into an economy and meaningfully slow it down. Well, we're not yet at March of 2023. So that period of economic deceleration may still be a few months away.
Paul Bagnell for us. Paul, thank you for all of that analysis. Really appreciate it.